Hello guys, and welcome back to a new video. In the previous video or the previous lesson, I shared with you 7 filters that will make any strategy that is based on either liquidity or market structure or basically price action. It will make it better, it will enhance its win rates, and these filters will reduce your losses tremendously, right? So I explained each one of these filters one by one, but without any examples. So in this video, I'm going to give you examples for each one of these filters, right? If you didn't watch my previous video, I highly recommend you to go and watch it. Take some time. It's not that long, and then come back here, or you can just follow along with me. In here, these are not very complicated. These are simple filters that will avoid you a lot of losses. So without any further introductions, let's get started with the first one. So first filter, avoid internal sweeps. I told you in a previous video that when multiple swings are still in play, above or below us, depends on the trend, wait for the last one to be taken. So in an uptrend, wait for this one to be taken, and this one will give you the best expansion, right? Or the best RR. If we go now to examples, and let's start with the first one. This is not the best example, but the following examples are way cleaner. So you can see that here we have price was pulling back, started trading higher, and then it starts going to the downside. Based on an uptrend that we have before this structure, we are likely to see an expansion leg. So we are waiting for the sweep to happen, for a sweep on a certain low and then expanding higher, right? So that's how uptrend works. We sweep lows and break above previous highs. So here we have this low. First of all, we had this low and this low, right? Price started turning to the downside. It swept this low, but still, if we look at the picture, we can see that we need to see sweep of the last low, right? So here, price swept this one, and you can see a very weak expansion. Came back one more time to sweep this, the last one, and then it kept trading to the upside and made a new high, right? Moving on to the next example, this one is way better. We can see that to the left, we had this high, and then this high right here, and also this high. So price swept this high and then a weak expansion. We still have liquidity above us. We still have smooth edges right here, right? So start turning to the downside one more time, trading and take all of them. And then we see a big expansion, right? One more time, trading to the upside and take all of them. And also this one. And then we see an expansion leg and price kept going down. And here, this is a live trade that I took, okay? So wait for the last low or the last high to be taken and then take your trade. Trade the extremities of the range, okay? That's where the high probability trades are. Moving on to another example, and you can see that here, these are just internal sweeps, probably not the one that's going to give you the next leg to the downside. So you can see that price was just in a tight area right here, but once it took the last high here, it gave us this nice expansion to the downside, right? So ignore these internal highs and wait for the last high to be taken. That's the first filter right here. Wait for the last one. It is likely the one that's going to give you the expansion. Moving on to the next example. This is very beautiful and very clean. The break-off structure happened here, right? So we are now in an uptrend. What are we waiting in an uptrend? For highs or for lows to be swept in order for us to continue the trend. So here we have a lot of lows here. We have this one, this one, this one, and this one, and also all these two right here. So we don't wait or we don't look for a reversal below this. We wait for the last one to be taken. And this one was beautifully taken and tapped into this zone, unmitigated zone. And then we had another expansion, right? Same thing happened in here. We took all of these lows here and then trade it to the upside to make a new high. Now, sometimes price will take this and then eventually expand, but again, we are playing with probabilities, and the best setups will happen after price takes everything, and then it will give you that expansion that you're looking for, okay? This is a beautiful example from today's price action. I took it live. So price was giving this lows right here, smooth edges or trend line liquidity. Based on the filter, we are waiting for the last one to be taken, okay? This was textbook. So I took a screenshot right here. I draw my line here. I'm waiting for this to be taken. And look what happened next. Price took this, right? Okay, it took this. And then we had the break of structure, candle structure shifts, change in the state of delivery, whatever. We have a market structure shift here within the candles. And then price expanded to the upside, right? So wait for the last low to be taken in an uptrend and wait for the long side to be taken in a downtrend. Okay, so now let's say, for example, that the low was located somewhere around here, like this one right here. Now, this is not logical. Don't trade with patterns. Don't wait for all of this to get taken and then trade to the upside. So the obvious liquidity is residing here with this trend line liquidity, okay? This one right here, price will not likely to go all the way to here to take it and then make an expansion, right? So trade with logic. If we have a trend line liquidity right here, wait for the last low to be taken and then look for trades. Let's go to now the second filter, which is no pullback plays if price hits a zone before reaching your limit. So sometimes price will trade to the upside. It will sweep a high, previous high, and you are looking to take a trade, but it will reject from it, tap into a previous zone, bullish point of interest, and then you're still trying to short it, but that sweep, that rejection already fulfilled its objective, and now we are going into another expansion leg. So follow the trend, and let's go to examples. I don't have a lot of examples here, but you can see that this is from a backtesting environment. We have this high right here, okay? Price started trading to the upside. It swept this, and then look what happened. We have the break of structure of the candles. This break structure of the candles is a lower time frame. On the lower time frame, it is a market structure shift, something like this. We're going to see it later on. Okay, market structure shift. And you are trying to short this, but we already tapped into this bullish zone, and it is likely that price will continue to the upside. So as you can see, price traded to the upside. And this is on the 1 second time frame. So this is the 15-second time frame, and this is the 1 second. Since price is fractal, don't pay attention to these time frames. It can be the 15-minute right here, and this one on the 1 minute. So you can see the break of structure happened here. Price headed to the downside, tapped into this bullish zone, and then continued to the upside, okay? So this is the second filter. I believe we have, okay, another example. You can see that price swept this high, started trading to the downside, right? So although we don't have a break of structure here, we have here on the 15-second, but it is also, or it is only to make a pullback into this bullish zone and then continue to the upside. I don't have the next picture, but price expanded from here and found support from this zone, right? So this is, if you are taking this kind of setups, so pay attention to this one. Now let's move on to the third filter. So the third filter is really, the frequency of this one happens a lot. So reject recent sweeps if the direct previous swing is swept and the previous zone is still resisting. So you can see that price trading to the downside, make this low, so returning to the upside, and then here it failed to take this low, so only wicks below it. People will consider it as a sweep of liquidity, and they're going to try to take it higher. They're going to look for a market structure shift on the lower time frames, and they're going to see this price return back to the previous zone and then make a new low. So let's go through examples. So basically what you want to do is you want to see the zone gets broken to confirm the sweep here. Let's go through examples. You can see that we have put in this low. Price are returning to upside. One more time sweeping this low. Don't go to here and look for market structure shift or market structure break to target this high, just because you saw this low. And this one can be also on like the 1 hour time frame, 5 minute. I don't even know what time frame is this, but it repeats on all time frame, and I'm going to show you later on examples on the higher time frame, right? So sweep, but you can see that the price tapped into this zone. One more time sweep. We don't take this trade unless the previous zone gets taken. This high, maybe it's supposed to be this high. Okay, so after the break of structure, you can now take the trade. So sweep of the direct previous swing and then the break of structure here. Now you can take the trade. Price beautifully expanded to the upside. This can be considered as a protected low until the target has been hit or fulfilled. Another one, sweep here. It failed to go higher. One more time sweep here. It failed to go higher, still resisting from these zones. One more time sweep. We wait for the zone to get taken first. We have the zone get broken here, right, with this candle. Return back, take the trade here, stop loss here, and then beautiful trade, right? One more example, this is on the 1 minute. We have a sweep here, but still this zone is still resisting, right? Sweep here, but still we have this zone. One more time sweeping. We don't take the trade unless the previous zone gets broken, which is this one right here, gets broken here, return back, and then price expanded to the downside, right? Another example here, price swept this. Still, we have this zone. We wait for it to get broken. You get broken here, and then we have the break of structure, return back to the SNDR, and then a beautiful expansion to the downside. And this one on the 1 hour of the US dollar against the Japanese yen, you can see that we have one sweep, but still this is the direct previous swing. Sweeping here, price return back. We still have a failure. This zone is still pushing price to the downside. One more time sweep. We wait for this to get taken or to get broken. We have that here, and then price expanded to the upside, and it began, and price began a new expansion leg. Okay, this is the last example. Moving on to the fourth example, and this one is simple. Skip sweeps seen only on the execution time frame, or at least favor the sweeps of lows or highs that is seen on multiple time frames, higher time frames. So for example, this low right here that has been taken is not seen on the higher time frame. It is only seen on the 1 minute. So what is the logic behind this? On the 15 minute, if there is a low right here, a formation of three candle formation, and price takes it. The rejection from the 15 minute, it can be only one candle or two candles to the upside, and then price will reverse after this, maybe. But those two candles on the 15 minute, you can capitalize on them on the 1 minute, okay? Let me give you an example, and it will make sense. So this was from today's price action and today's trade. So this is the 15-second time frame. This is the 1 minute time frame. Just like I showed you from the first filter, wait for the last low to get taken. The last low, this one right here, is also seen on the higher time frame, okay? Which is the 1 minute. After price swept it on the 1 minute, it gave what? Only one candle to the upside. That's it. Only one candle, and this is a wick right here. So if you take it on the 1 minute, it's gonna be a failure. But on the 15-second, that reaction, that small reaction on the 1 minute, it gave me a 1-to-1, a nice 1-to-1. And if I took it from the retracement here, it gave me even 3-hour trade. So always, or it is best to wait for sweeps of lows in an uptrend that is seen on multiple time frames, right? So it can be the 1 hour, the 1 minute, it can be the previous daily low or the previous daily high, and you go to the 5 minute. You can take a beautiful setup, and you don't even need to be right on the higher time frame. A higher time frame can reverse after this, but you still, in this example, I got my 1 hour, right? And let's go to the 5th filter, right? Ignore all swings when facing massive moves. So don't try to reverse a trend just because you saw a bearish setup. Just because you saw a bearish pattern, don't reverse the trend. If we go to the examples, I only have one. Okay. So here, price was trading to the upside, and you can see that there is a really heavy trend to the upside. You can know it by this big bullish candles and the shy pullbacks. So here you can see that it swept this. We are inside the zone. On the lower time frame, we have a market structure shift. If you want to take the trade out here, you could have taken a big loss by simply don't try to reverse this big expansion moves, okay? This market structure shift right here could be the pullback itself, and the pullback has ended because of the big or the strong trend to the upside, and you are still trying to take it short from here, okay? And so that's the 5th filter for you. Moving on to the 6th filter, no sweeps at the edges of the zone, or just simply no trades at the edges of a zone. The edges is in an uptrend. Don't try to take a long trade in the beginning of the pullback. So this is just a shallow pullback. Don't try to buy from here, right? Unless we are in a really, really uptrend and a strong uptrend. So let me give you an examples. And as you can see, to the left, this is an expansion, like a pullback. We have a pullback, expansion, pullback, expansion, and then we have a pullback. So don't try to buy from here. We are still at the top of this zone right here. Wait for price to give you a decent pullback, 30%, maybe in this case, wait for price to come back all the way to here. This is a logical retracement, right? Price can sweep this low and then continue to the upside, so don't try to do this. Expansion, and then maybe this is the pullback right here. Don't try to buy here, wait for price to come back here, and then look for entries, right? Let me show you another example. This is also another example. This is the previous zone right here, and I was trying to short from the bottom of the range of this range right here, okay? And for ICD students, this also can be referred to as premium and discount, okay? So this is still from this high to this low. This is still a discount, right? I believe, yeah, this is discount. Wait for price to come back to premium prices and then look for continuation trades to the downside. This one is a beautiful example. I shared this on my previous video. This is the previous range for the DTFX. They're going to take the low to the high. For ICT students, they're going to take the high from the low here, or this, or this, or this one to this one. Anyway, don't try to short from here. Wait for price to give you a deeper retracement and then look for shorts. This is the last example. The last filter, don't fight the trend by trying to reverse an expansion before the target is hit. So a lot of examples, a lot of times price is trading to the upside, gives a pullback, and now the pullback has ended. and price shifted to the upside to prepare for another expansion leg. And a lot of traders will still look for shorts, although the next target or the next logical target is this high, the high that put in the pullback. For example, like this. Price trading to the upside, started trading to the downside here. Now this is a pullback, right? Now the pullback ended here after tapping into some point of interest, and now we are bearish or bullish. So here people will see something like this, a market structure shift, and they're gonna try to short it. Now we are in uptrend. Uptrend moves like this. So after the pullbacks ends, the next logical target is what? The high. This one. So you're trying to short an expansion leg, and the obvious target is just above you. So in 9 out of 10 times, you're going to lose right here. This is a losing position. Let me give you an example for that. You can see that we have an expansion here, and then a pullback, and now we shifted structure and we are trading to the downside. Here you might see a shift in structure, right? Tapping into this previous zone like this, and we have a market structure shift here, and you might want to try to short this, and as you can see, a losing trade. So although I know that this is likely to be a losing trade, I like to take losses in a backtesting environment to reinforce these rules that I put to myself, to convince my mind that these rules are here for a reason. Okay, as you can see here. So I believe that this is the last example. So these were the 7 filters that will definitely help you to increase your win rate, to avoid low probability trades. Of course, they're gonna lower the frequency of your trades, but do you want to take or to spend more time on the chart, or do you want to make money? That's your choice. Now, if you have any questions, DM me in my Twitter account or leave a comment down below, and I will answer you as soon as I can. Now, happy trading and good luck.